Okay, well, U.S. pension funds lost over 26% last year, and that has led some pension managers to move money into index funds. One of those managers is Bill Atwood. He's the executive director of the $9 billion Illinois State Board of Investment, and he comes to us now from our Chicago newsroom. Mr. Atwood, thanks very much for being with us.
Thanks for having me, Betty.
Okay, as we mentioned, your fund moved about $400 million into index funds from actively managed funds. Give us your reasoning for that.
Well, there's an ongoing debate about the utility of active management and whether, particularly in the large cap space, whether active managers can routinely beat the index. But beyond that, we really look for active management to provide us some downside protection in a rough market. On the other hand, what happened was just the opposite. In the sell-off that we experienced over the last 18, 24 months, again, particularly in the large cap space, most of our large cap managers were just unable to beat the benchmark. And so we were paying active management fees and getting basically negative alpha. So the decision was made to cut our losses, to markedly reduce the fees that we're paying, and then be confident then at whatever point in the future that the markets turn around, we'll be able to fully participate through these passively managed accounts.
Now, do you have any money left in actively managed funds, or have you exited them completely?
We've reduced our exposure to active management by about $400 million. About half of our equity portfolio right now is passively managed, because we still remain confident in the value of active management, particularly in the small cap and mid cap space. There's a lot of inefficiency in the among smaller companies. They're less followed, they're less traded, and so good active managers can still add a lot of value there. And our experience in the small cap space has been much more favorable.
Right, because my question would be, how can you expect to outperform, your portfolio to outperform, if you're going to put more and more of your money into the index fund?
Well, outperforming isn't the critical issue when it comes to our equity portfolio. There's an old saw in our business. 90% of portfolio returns is asset allocation, and 10% is security selection. So the critical issue for us is getting the asset allocation decision right, and then being confident that the assets that we allocate to will perform in a manner consistent with our expectations. So before we go about trying to push the envelope and marginally increase our returns in the equity space, first and foremost, we have to be confident that the equity portfolio is going to behave in a manner consistent with our expectations, so that the overall portfolio will behave according to expectations. Conventionally, we spend an inordinate amount of our time worrying about security selection, and it becomes a distraction to the bigger question.
Mr. Atwood, just give me a sense, though. I believe your portfolio is, what, $8.5 billion, if I'm not mistaken. I mean, how much
That's about right.
About right. Okay. How much of that is put towards fees? Because that's essentially what you're talking about. You want to get away from paying the fees.
How much is put towards fees?
Right. How much fees do you pay?
About 24 basis points.
Okay. All right. So that's quite significant then for you.
And index funds, we're paying right about 1 basis point.
Okay, well, that's a huge discount there, a huge decline for you in terms of money being paid out. Okay, let's move on to this other issue about placement agents, because actually your state has been pretty much in the forefront about barring investment firms, I believe, from using placement agents in order to get business, essentially, from pension funds like yours. I mean, what is the future of these placement agents?
I think it's murky. We've gone through a period. Illinois was in the leading edge of regulating placement agents, and we're also, unfortunately, in the leading edge of placement agent scandals. We had a situation a few years ago where an individual was paid over $1 million to help get money, to place money at Teachers' Retirement Fund, and it was perfectly legal. So, this problem with placement agents is a broad problem.
Mr. Atwood, we've got to go. Thanks so much.